ANKR update.
Let's get into it.
So today, guys, we are going to be taking a cheeky look at ANKR to specifically, to see exactly what has been going on with the ANKR project on that technical analysis. We'll also have a look at the entire crypto space as well, how, the entire crypto space is quite fearful at the moment. We'll be taking a look at the fear and greed index and where that sits. We'll be having a look at Bitcoin's dominance because there's nothing new there. It is kind of as expected. We'll jump into the ANKR charts. We'll be taking a look at the daily. If we get time, we'll drop down into the hourly as well as the weekly to see exactly what is going on here when it comes to the price of ANKR and what we may be expecting to see in the near term as well as the long-term future. If you guys do find this video useful and informative, do go ahead and hit that like button. We both really do appreciate it. And of course, if you happen to be new to the channel and you want to stay up to date with those new cryptocurrencies, the hidden gems, the technical analysis and news, then do become a subscriber, because by becoming a subscriber, you will be kept up to date with absolutely everything. It's free. You'll stay well informed. So why not? Right, Chris, anything else you would like to add before we jump on down and get into everything ANKR?
Yeah, I think ANKR is a quality project. I think it's going to do remarkably well. So yeah, some of the insight that Nick's going to go through with us is, it's good to listen to. It's going to be, one to pay attention to, I feel.
Fantastic. Right, let's jump on down and get right on into it.
Let's do it.
Okay, guys, to start with, here is the fear and greed index. This is pretty much the same thing that we've spoken about in the last couple of videos. Ultimately, we're at current status here of 14, extreme fear. Yesterday was 12, so we got a slight recovery on yesterday. And I think it was actually 11 the day before that. So we're swinging around the extreme fear area. Last week came in at 20. Last month was 55. Ultimately, the entire crypto space, if you pay attention to this graph, tells you it's extremely fearful. Now, that's not 100% accurate because there are pockets that actually are doing quite well. So, for example, we had Solve yesterday move 180% to the upside, set some fantastic good returns on investment there. And it was really in line with what we were talking about Solve back in November and the potential of what's going on with that project, right? So clearly it was not in an extreme fear situation. You have to look at them project by project, cryptocurrency by cryptocurrency, rather than just looking at it as a whole, because ultimately the entire crypto space, if you look at it this way, says every cryptocurrency is in danger, when that is not correctly true, right? Currently true. There's ultimately pockets of good out there. So Cardano is not as fearful as Bitcoin, for example. And you might see that actually 𝗕𝗓𝗪 or ANKR is more fearful than that of XRP, right? So they do not all correlate together. And you can find out more detail on each of those cryptocurrencies by visiting 𝗖𝗢𝗠𝗠𝗘. And here you have a list of cryptocurrencies, and you can go into each of these and actually find out what their ratings are, what the fear levels are for each of these individually, rather than just relying on this one here, which obviously only shows you the entire crypto space as a whole, including Bitcoin and alts. So ultimately right now we had a bit of a recovery on this up to 14, and it was obviously 12 yesterday. So I'm not going to talk too much more about the fear index. It is what it is, because you can quite easily see, right? It's blood in the streets, spill absolutely everywhere. And, lots of fear up for sale. Now, if we take a look at this is Bitcoin's dominance. We look at this one quite a bit as well at the moment because it is quite important to understand what's going on here. And obviously, we've got a bounce from our 39.27% dominance level. Now, if we just shoot on over here, this is what happened in the last bull run of 2017-2018. We actually came down, we actually bounced from 37.45. And a lot of people were talking about this potentially being the top, right? This one right here. Oh, that's the top. That's it. It's done. Bear markets come in. Wrong, because it tops out up here, sure, and then it goes ahead and the alt season comes in early January 2018, and that's where everything peaked out. And this actually dropped down. Bitcoin's dominance dropped down to 32. So what we're seeing right now in terms of Bitcoin's dominance is exactly what happened prior. History tends to repeat itself. We come down, but this time to 39, not 37, and we'll be moving back up, I believe, to the 67% area, although there will be a slight resistance up here at 51, where we'll end up a slight kind of bounce back for alts, Bitcoin will slip down and then it'll go back up here before dropping right the way back down. That's how I envision the Bitcoin dominance to go. It's going to be playing around with us quite a bit. Obviously, there's more manipulation in the space now, Wyckoff, all that kind of good stuff going on in the background for those who are paying attention. Ultimately, the institutions are manipulating us both on the up and on the way down, telling you that it's the bear market, all of that kind of stuff, and then accumulating, pushing the price back up where you'll then continuously buy back in, and then they drop it again. So watch the space. Lots of manipulation for anyone who's paying attention. With these institutions are used to doing this, they pay the fines, but the fines obviously are much lower than the profits that they generate. So right now, if you know what's going on, you know how to handle yourselves. Try not to leverage, because obviously that's going to potentially end up in liquidation and things like that. You want to be, basically, if you can't afford to purchase, then it's not an opportunity for you. Otherwise, make sure you own the coins. You don't use leverage, don't use things like eToro or Robinhood, stuff like that. That's my opinion. I don't like leverage. It's very risky and you can be liquidated. So obviously during this whole entire crypto crash, the majority of the selling that was actually happening was just liquidating positions on the way down. And people just were unable to log on to platforms to cancel their orders and all that kind of good stuff. So there were pockets of people selling, but ultimately the majority of it would have been driven from institutions jumping at the top here, as we've seen other whales kind of selling off their Bitcoin at 58K and then buying back down here at 30K. And then the rest of it is just liquidating positions on the way down, making the situation worse and pulling everything down. And then obviously there's a little bit of fear in the market, or extreme fear in the market, where then loads of people are selling. Loads of people are then buying into the FUD that there's a bear market, when actually what we're looking at here is exactly what happened prior in our 2017-2018 model, where we come down here for Bitcoin's dominance. We're looking to go up there, looking to pull back down, and then we know we actually have got that alt season coming in. So that's what's kind of going on in the bigger picture of the crypto space. And if we take a look at this, this is ANKR to the USDT. This is with a daily chart right here. And I've got this one up and I've zoomed out quite a bit, because we need to see the bigger macro picture rather than just the micro picture that we often normally just zone in on. Specifically on live streams, we talk about the short-term stuff rather than the bigger macro pieces. Now from here, we can obviously see that we had that low down in March. I think it was March of 2020, right? When that other big crash that happened. I think most people are familiar with that. When that came in, that also triggered the start of ultimately a bit of a bull market, right? End of the bear, beginning of the bull. And here we have wave one of our Elliott waves. Okay, then that triggered the second wave, which was a healthy correction. That came in at a 300% correction, guys, from here to here, right? And I don't think there was that much extreme fear at the time, because obviously there's not too many new people in the space who don't really know what's going on. At this point here is still relatively new, or the existing kind of investors in the space who are used to these swings, right? So ultimately we moved the price up significantly. We had that claim back down here, another accumulation period, and then we moved up to that next level. Now this is where we saw a lot more kind of FOMO, very extreme parabolic moves to the upside. Again, biggest wave, okay, wave 3 is usually the biggest. Now we're in wave 4 right now. This is the next correction, okay? So in the same way we saw wave 2 here coming down and having that correction pulled down to the 200 moving average. We can see now that wave 4 coming in has seen the same kind of correction, but it's not as extreme as this one here from a percentage point of view. That being said, I still feel there's actually a little bit lower we might have to drop down to. So what I'm going to do is I'm just going to pull this up into our weekly view, and I'll show you exactly what I mean. So down here, this yellow box is a bit of a gap that's been left behind. Okay, so this box here is an area that we might actually have to come back down to and refill. It's basically test to make sure that we filled all of the gaps on the way down. So there's a potential, I'm not saying it's going to happen, but it's potentially going to happen, that we might actually fall down to about 4 cent or 4.1 cent. Now, I don't think necessarily that is going to happen. Sometimes these gaps are left behind and you don't actually fill them, right? But it is there, so it's worth acknowledging that there is a gap here. And I've actually put the fourth wave down at the bottom there, but it may actually be up here on this other yellow line that comes in at about 6.6. Okay, and if that's the case, actually we may have already kind of had the bottom coming here for ANKR. But I do want to kind of say that there's potential here to drop down to about 4.1 cent, as that is an area that has not been filled yet when it comes to this cryptocurrency. So if I go ahead and pull this back into our daily view, what does that mean? Well, ultimately there is an area over here of other interest, right? And so the wave 1 to wave 2, we can go ahead and throw a Fibonacci retracement on here. And if I put that in, our top of this extension level, the 4.236 area, comes in at 65 cent. And this yellow line comes in here at, and you can see it, right, at 6.5 cent, as I said before. Now, our yellow line actually comes in at 6.6, so I think I've probably just missed that off a little bit there. It's not as high as it needs to be. Let me just see if I can get that on the nose. There we go. Right, so 6.6 cents. So 6.6 cent is an area where we actually kind of really had a lot of accumulation, a lot of support actually found on. And this is also an area that we actually pulled down to on this recent correction. So when we look at this Fibonacci extension level, it actually went that full extension up here and kind of hovered around here and waited for a little bit. And it's this particular area that actually the crash recently actually pulled down to. So this is really interesting because ultimately that means that that could actually be a good support line for us. And that could actually be where the bottom of the anchor is. And actually, we do not feel this yellow box at all. But it is worth just pointing out that the yellow box exists here. So it's one to just make sure that we are aware of it. For now, we could see us come back down to the 6.6 cent or fall down into the 4.1 area. So we are mindful that there is potential downside to this thing. The other thing that we got to bear in mind here on this daily chart is the 200 moving average. Now, if I just follow this down to our previous area down here, our wave 2, this actually found support on our 200 moving average, okay? So our simple, well, it's a moving average, right? So ultimately this area here, this 200 moving average was the support line that then took us into wave 3. So right where we are now, we can see that the 200 moving average is just inside our yellow box down here, but it is a little bit below our 6.6 line. So we could potentially fall down to this 200 moving average and call that the bottom and bounce up from there, triggering wave 5. So wave 5, guys, is where things start to get interesting. If I zoom on out here and just pull this down, we can see that wave 5 actually goes up to an extension level of about 78.9 cents. Okay, so that would be the full extension here based on our low of wave 4. So of course, if wave 4 goes a little bit higher, we'd have to adjust this a little bit, but ultimately we're kind of feeling that actually this wave 5 is more likely going to be in around that 80 cent area. So right now, wave 4 is going to be having this correction, pulling this Dyson low into this area for more accumulation, and then we'll be going into wave 5, which will take us up to the higher areas there and into, potentially then an ABC correction to the downside. So we'll be mindful of what's going on there. Time is the hardest thing to gauge. We do not know how long it's going to take. We could take a look at any of these other waves that we've had in the past, take a date range here from our low point through to our high point and say, okay, well, that's 180 days. It could take 180 days from here to here. And that takes it into December. So again, this aligns a lot with where the bull run is likely to end, which will be the end of December, beginning of January. But again, if you take a look at the price and or the date range from our low of wave 1 over here, then actually it's a 150-day move to take that, again, not as far, right? So that would be September. So time's the hardest thing to gauge. You're never going to get that one spot on right, but it is good news, guys. There is going to be a little bit of pain up front now, but that's pain if you choose to see it that way. I see that as an opportunity, not to overextend myself, but to purchase more in some of these key cryptocurrencies, and then triggering into wave 5, where we go ahead and see very green days up ahead. So right now, things are looking quite bad when you look at the entire space. If you're in that kind of fear mindset, if you're an investor long-term like myself, like Chris, who actually think longer term than just 2021 bull run, and actually start thinking the main bull run for cryptocurrency, in my opinion, is going to be the 2025 bull run, then ultimately right now, these are fantastic prices to be building a very good position for 2025. But if you do want to be taking profits, wave 5 here for ANKR is looking very, very attractive. Chris, that's everything I have from a technical point of view, but is there anything else you would like to add?
Yeah, like I expect ANKR to still do really well this year. I'm not buying into the fear. I don't tend to do that unless I see something that, actually does make me fearful, right? Lots of FUD out there, lots of worry and panic. And I completely sympathize with everybody that's feeling that, right? But yeah, I'm not currently. I'm looking at very similar reductions in my portfolio. But that's part and parcel of the space, and we said to expect this, right?
Absolutely. Guys, hopefully you found this video useful, informative. If you did, hit the like button. We both really do appreciate that. And of course, if you happen to be new to the channel and you want to stay up to date with absolutely everything we do here, from those new cryptocurrencies, the hidden gems, technical analysis and news, then do become a subscriber, because by subscribing, you'll be kept up to date with absolutely everything. It is free. You'll stay well informed. So why not? With that said, done and out of the way, we hope everyone has a fantastic day, and we'll catch you all in the next one.
Yeah, take care.